Hello and welcome back to our channel. Today, we journey back to the Democratic Republic of Congo, where two Chinese companies have agreed to increase their investment as part of a mineral for infrastructure deal. The renegotiated mining deal ensures Chinese companies invest $7 billion to local infrastructure over 20 years. President Felix Tshisekedi's government revisited the deal struck by his predecessor, Joseph Kabila, under which the Chinese partners agreed to build roads and hospitals in exchange for a 68% stake in the joint venture with Congo's state mining company, Sicomines. While the mine has operated for years, less than a third of the development money was ever disbursed to the DRC's government, and raised the issue during a visit to China. Also authorized an investigation into the deal, and in February last year, the DRC's General Inspectorate of Finance released a report saying the country had not been adequately compensated for the copper and cobalt reserves it contributed to the deal. The audits reveal the promised investment fell far short of expectations. Stay tuned as we unravel the layers of this groundbreaking development, unpacking the implications and exploring what lies ahead for the Democratic Republic of Congo in this renegotiated deal. Don't forget to hit that subscribe button and join the conversation down below. Now, let's dive in. China has been the DRC's largest trading partner and source of foreign investment for many years, and the most common destination for all exports of the DRC. Chinese investment has been heavily concentrated in the extractive sector. In the Democratic Republic of Congo, where roughly 70% of the world's cobalt is produced, Chinese firms own or had stakes in 15 of the 19 cobalt-producing mining concessions. The DRC remains one of the world's leading suppliers of minerals, particularly copper and cobalt, which are crucial raw materials for green energy. The infrastructure agreement gave Chinese partners mining rights to cobalt and copper, and around 80% of DRC's cobalt is shipped to China for processing. The DRC supplies more than 60% of China's cobalt, a key component in batteries for electric vehicles and electronics, making it a key player in China's transition to green energy. Sino-Congolese mines, Sicomines agreement, a resource for infrastructure deal, is a sort of barter deal struck between the DRC and China, where the latter is allowed to mine cobalt, copper and other minerals in exchange for infrastructure investment in the country. The Sicomines joint venture consists of a 68% stake for the group of Chinese enterprises and 32% by Sicomines, the Congolese national mining company. The original Sino-Congolese mines, Sicomines agreement deal promised $3 billion in infrastructure projects paid for by proceeds from Sicomines. The deal was signed under Joseph Kabila's presidency. Kabila's intention was to bring investment into DRC without increasing its foreign debt. Under the original accord, a group of Chinese investors, including state-owned Chinese firms such as Sinohydro and China Railway Engineering Corporation, entered a $6.5 billion joint venture with Congo's state mining company to run the Sicomines copper and cobalt mine. Innovative minerals for infrastructure deal was a response to Congo's pressing development needs. In exchange, China agreed to build much-needed infrastructure projects such as open roads, highways, and hospitals. Congo is Africa's second biggest country by landmass, and large parts of it are almost inaccessible. The country is roughly the size of continental Western Europe, but has a grossly inadequate road system due to endemic poverty and conflict. Now, 62% of the Congolese population lives in poverty. In addition to new infrastructure, the Sicomines deal was expected to provide a significant boost to the DRC's economic growth, but the deal did not live up to expectations. Now, after President Tshisekedi was elected, he decided in May of 2021 to completely reassess the Sicomines agreement, which has been criticized by Kinshasa as being too favorable to Beijing. The $6.5 billion contract between the countries in 2008 provided little benefit to the DRC according to President Tshisekedi. Now, let's look at the initial agreement. Initially, Sinohydro Corporation and China Railway Group committed a $3 billion investment in infrastructure alongside a comparable amount for the development of a copper and cobalt mine. The 2008 deal promised $3 billion in infrastructure investments paid for by proceeds from a copper and cobalt mine called Sicomines. The view was that the agreed volumes of mineral production would contribute to higher levels of export, tax revenue, and an inflow of US dollars. However, almost 2 decades on, the Sicomines had not lived up to expectations. There have been infrastructural delays as well as unexpected costs, and there has also been problems associated with poor quality roads and infrastructure. The country is yet to receive taxes from this deal. And here's the kicker. Despite the mine operating for years, less than a third of the development money was ever dispersed for investments, according to the DRC's government. The report said that Chinese firms had exploited mineral resources worth $10 billion, but had only built infrastructure estimated to be worth $822 million US. Was not benefiting the people of the DRC and wanted better terms renegotiated. For Congo, renegotiating the contract involved increasing the Sicomines' share from 32% to 70% and reducing China's share from 68% to 30%. They also demanded that infrastructure works be undertaken equally by both Congolese and Chinese companies. It is unacceptable that all the works were given to Chinese companies which overcharged and pocketed significant profits, said Alinkete Keys. DRC also intended to ask for compensation, according to Alinkete Keys. They also stated that the minerals extracted by Sicomines are sold at half price to Chinese companies, which also happen to be Sicomines shareholders, which resulted in a loss of $7 billion. For Sicomines, the Congolese partner of the deal, Alinkete added. What are the new terms? And did the DRC get everything they asked for? According to a statement under the new deal, the companies have agreed to increase their spending on infrastructure from $3 billion to $7 billion. The Chinese construction companies will invest up to $7 billion US in infrastructure projects as part of an agreement over the Sicomines copper and cobalt joint venture. Both parties agree to maintain the current structure of the shareholding, while the Chinese party, Sinohydro Corporation and China Railway Group Limited, will pay 1.2% of royalties annually to Congo. The renegotiated contract gives the Congolese side a larger stake in this company, whereas Chinese side still has a majority stake. The new financing is principally destined for the construction of national roads. Sicomines says that its shareholding remains untouched. The renegotiations, Sicomines has a 32% stake. Congo will also take a 40% stake in the Busanga hydropower plant that feeds the mine. In addition, the Sicomines deal want exemption from taxes until infrastructure and mining loans were fully repaid. This means that the DRC will not receive any substantial income from the agreement in the foreseeable future. The renegotiated contract gives the Congolese side a larger stake in this company, whereas Chinese side still has a majority stake. In conclusion, the Sicomines contract and its renegotiation represents a new crucial step in the development of much needed infrastructure in the DRC, but based on their initial demands, was this really a win-win cooperation as stated by the Congolese and Chinese government? What are your thoughts on this new Sicomines deal? Please share your thoughts in the comment section below. And if you haven't subscribed yet, your subscription would greatly support our channel's growth. And until next time, thank you for watching and goodbye.